The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources podcast.
Well, with the market setting new highs, not every day, but with some consistency over the last month, one of the questions which is frequently debated on financial websites and podcasts is the market overpriced? Is it overvalued? Is it too expensive? Does it make sense to jump in at these high levels because we've already had such a big run from last October? They're all legitimate questions, and they all require some perspective. Our stock price is too high, and of course the leading one on that issue is usually NVIDIA, though super microcomputers is a bigger deal, but it's not as well known because it's not part of the major indexes. But people who subscribe to the efficient market theory have to say nothing is ever overvalued, because the entire market knows every relevant fact, and they use reason. Rational people make decisions about what they're going to spend their money on and build their portfolios. So one of your big questions has to be, do you believe the market's efficient?
And how efficient? And what time frame is it efficient? I think the market is pretty efficient over longer time frames. Shorter time frames, I'm a firm believer that prices get substantially out of whack, and because we've seen it happen so often. We've seen during the tech bubble, we saw companies with no earnings and no prospects of earnings get billion-dollar valuations because they had a great URL and they were going to make a fortune. How could they miss? Well, it was really easy to miss. So they were wildly mispriced. Speculation just drove prices through the roof, and you have to watch out for that. You have to be careful, especially in the short term, about is this market getting bid up just on pure speculation, and when that turns, do you want to be part of that process? So right now, you were talking about NVIDIA, Don. That's kind of, what is it, up 80% this year in March? So it's like it's having a pretty good run. Is that too much? Only time will tell. We don't know.
Well, I sold my shares at $600.
Yeah, there you go.
So
it was too
and
much
you're
then,
saying,
right? That's too high. Yeah.
It looked expensive at the time, and then I listened to Fox Business News a lot in the morning as the market opens and beforehand. And there was an analyst on I believe it was Thursday, it might have been Wednesday, that said he expects that while he's sold some of his NVIDIA, that he's going to buy it back because he now thinks NVIDIA could go to $1,200 or even $1,500. But how do you do that? Well, you have to have continuing significant growth in earnings. And can that be maintained without some significant disruption? Now, if you're an efficient market theory investor and you bought NVIDIA at this price 10, 15 years from now, you could be very wealthy off of that investment. But then again, Perry, as you just mentioned with regard to the tech bubble, there are a lot of companies that 10 years later, people totally forgotten about because they were bankrupt and had been for years, out of business, gone, bye-bye, never to be seen again. It seems unlikely with our dependence on chips that NVIDIA is going to go the route of bankruptcy in 10 years. They've got the leading chip development right now. But nobody knows what kind of bad decisions can be made by management.
That's it. It's important to remember that NVIDIA is at the very leading edge of AI chips completely by accident. They were building chips for video games, and it turned out they were perfect for AI. So they backed into the lead here, and they are working really hard. That's one of the reasons their valuation went up. They're working really hard at not sitting on their laurels and saying, yeah, we're number one, we're going to be forever. They're coming out with a whole new set of chips, a new class of chips that are over 5 times faster than the chips they have out right now, which are the best on the planet. And so they're going to continue to try to drive that. But it's important to remember we're on the very leading edge of this. We're on the very front end of AI. Where's it going? No one knows. Who are the winners and losers long term? No one knows. We just have a stack of companies right now that are doing very well, but you don't know how quickly they can become they get leapfrogged by someone who came out of left field with something brand new, and then everyone said, "Oh, there's the next step. We didn't even see that coming," and that can happen to a company like Nvidia or Microsoft or Google or anyone else because it's so new and the market is enormous. So the potential for surprises are huge. So in the longer run, even if you had a great start and a huge head start like Nvidia, doesn't mean you're going to stay there. So it's important to stay on top of it all the time. And things are going to change fast, and it's going to be a bumpy road. There's just no two ways about it. So when you wonder, is it too expensive? Probably not right now. Probably not too expensive. There's so much growth that can happen. The problem is making sure that you're with a firm that's going to get the growth when it comes and not somebody who's going to get bypassed by some other firm. And that's really tough here at the very beginning of any trend that's just starting. It's really hard because there's going to be winners and losers. And because it's such an unknown, there's always risk involved there.
So you mentioned their new chip with named Blackwell, and it's 5 times faster.
Yep.
But one of the other important
Correct.
parts is that it uses less electricity. It's less energy consuming. So that gives
Yep.
it one more leg up on being in the front end of demand. That's keeping they expect their sales and their profits to continue to grow at least for some time. So that's a positive. So is the market too expensive? Well, actually, when you go back and take a look at where this is, particularly with Nvidia, its average price sales is just about where it is now from over time. It's
Yeah.
just that this is such an innovative idea. We don't know how it's going to get adopted, but it is going to affect every sector of our economy. And I mentioned that management can screw up and make a mistake and
Yes.
just unwind all the gains. And that's the case with
Yep.
Alphabet. I mean, their early adoption, they called early adoption of AI is Gemini. And
Correct.
it turned out that they decided to implement diversity, equity, and whatever's the I in a DEI. They decided that that was more important than accuracy. So if you're using their AI product, they built in inaccurate responses to be sure that they gave racial preference to the way the responses were made. And they're now having to back up, and it's created, well, I'm not so sure I want to use AI that's going to give me bad results. I mean, if I'm going to do AI work, I want accuracy, because if I don't do accurate work, it's bad for my presentation and my credibility. And apparently,
Absolutely.
nobody in management thought that was an issue when they made that priority decision in programming. So, we don't know how long it'll take them to actually recover some ground from what I would consider to be a major mistake. Let's do a product that's inaccurate.
It's a
Oh,
huge mistake.
oh,
Huge
great.
mistake. Yeah, they
Why
they
did
they
why didn't
missed
I
it
think of
really
that?
bad, and it's a really fundamental thing. Yeah, that should have been at the forefront of everything they were doing, because if you're going to use AI, especially generative AI, to produce things for you, you should at least get accurate information in the output. And when you have a medieval English king that's portrayed as being of Asian descent, well, that doesn't work too well. It's like that never happened. That can't be true, and they had to shut it down. They pulled it within a day because the pushback was so immense, and the mistakes were so hilariously bad. And that's the kind of thing that can happen to somebody like Google trying to get in front of this. and they missed it badly. Are they going to get it right? Yep, they'll get it straightened out. It'll all get there, but there's going to be serious hiccups along the way, and there are going to be times when someone like Google, a Magnificent Seven company, that's going to really trip and really get tripped up by this technology, because no one really knows, where it's going or where the applications are going to be, and you find out that, hey, some of our most fundamental assumptions about how we were going to use this are not accurate, and we're going to have to go back to the starting gate here and try again, and they will, and they'll get it straightened out. It's just, how long is it going to take them? How much are they going to have to spend? How much time are they going to have to spend retooling when someone else is not? So how far behind are they going to drop? Those are all the kinds of things that can happen here. Those are the kind of things you look at. Well, is the market too high? Is Google too high? Well, Google was a really early adopter in AI, and now it seems, even though they got in quickly, they're having a little hard time with implementation, and that's where the rubber meets the road, and they're having a little trouble right now.
So in the semiconductor business, there are a lot of companies that are bringing up the rear, if you will, but it's hard to say which one of them could easily knock off, whether it's Google, Alphabet, Microsoft, NVIDIA, even Supermicro. All of them are subject to the risk of competition in a very competitive business. And you think it can't happen. Gen Xers and millennials have no real life memory of the leadership that IBM had in the 50s and the 60s and the 70s, when some young
Right.
kid in his garage in Seattle, just not far from the University District, came up with the DOS operating system. His name was Bill Gates. IBM almost, well, they were knocked off their pedestal, but they came close to losing their entire business because of bad
Yep.
mistakes. They didn't want anything to do with it. Then they found out that they had to try and compete, and their product just absolutely failed. And it took them a long time to restore their reputation and figure out how to run a business separate from DOS, which they eventually licensed. But so there is somebody who's going to come up with something. We turn around and take a look at a broader section of the market, and the earnings season basically is over for this quarter. So we start another earnings season in the second week of July. And the expectations for that earnings season are that earnings are going to begin a broader improvement across the board, because a lot of the pandemic problems with earnings are going to drop off the reporting period and out of the data system. It's not that the data goes away. It's just that the year over year data is going to change. Quarter over quarter is going to change. And that looks like it's improving. One of the signs of that, which is not reported on the news, you have to have some sort of data feed to track this, so you're looking at a lot of stock charts, is that dark pools, which are predominantly very large pension plans and mutual fund managers, are even at these, quote, high prices, are consistent accumulators of stocks. They would not be doing that if they anticipated that next quarter's earnings were going to be another bad news scenario. So
Correct.
entry price is always important, to paying attention to how big the spread is if you're buying individual stocks, or even if you're buying exchange traded funds. They have a spread. And in fact, this morning I cleaned out another almost a dozen ETFs on my watch list because there's no volume and the spreads were really big. I had one as a 34-cent spread on I think it was a 30 something stock. I said, well, that doesn't
Right.
make any sense to give up a whole percentage point just to own a concept stock. So if you're running your own portfolio, there's some extra things you need to pay attention to and what your monitoring system is. And to run a good portfolio, you need to have a good investment process. Conditions of which, one of which would be, it has to be pretty stoic. It means you got to leave your emotions at the kitchen table when you move into your computer to buy your stocks or to monitor your portfolio. And the process must be consistent. What are your rules? Do you actually have rules that are written down that if you're sick, you could tell your your adolescent child, I need you to go do this and go through this checklist and see if all these things are still true. And if they're not true, this is what you do. That's an investment policy. It's a process that's repeatable that you can teach somebody else to do. You got to be self-critical. You got to look at, you're going to make mistakes. Everybody makes mistakes in the investment business. Even Jamie Dimon at JP Morgan, one of the smartest men in the world when it comes to finance, has made some big mistakes, and he will fess up to them if somebody says, well, that didn't work out right. And yeah, he says that didn't work out right, but that's the business. Now, this is not a business of certainties. This is a business of probabilities, and probabilities look like they're favorable, or you would not make the trade. Sometimes they switch on you, they reverse. And you've got to be stoic enough with a process that says, that didn't work. Let's sell it, protect my capital, go find something else that has better probabilities.
You got to be able to move on. And that's what a strong process will be able to do, even at times when if it gets a little off track or you have a misstep or the market doesn't cooperate with your process, which happens regularly. That shouldn't be enough to push your process off center, though. It should be able to realign, get going again, and stay loyal to the process. And over time, that's going to work well for you.
So that's what we do for our clients. We're registered investment advisors. We're fiduciaries in every investment engagement that we have, every client engagement. If you want an analysis of where you are in your portfolio from our perspective, it's a freebie. You just give us a call or send us an email with the list of tickers that you own. We'll be glad to give you our objective review. Subscribe. Information's down below, and register for the next webinars coming up 5th of April. Have a great day, and thanks for listening.